All right, we'll call to order this Board of Directors meeting at 6:02 p.m. The board has a land acknowledgement and anti-racism statement posted to its website. Roll call tonight. We have let's see, Brian, Jaime, and Keith all with called in with excused absence. So you're not here from Asia or Gail. All right. We have in attendance, we have Stu, Sonia, Sam, Paige, Nancy, and Linda's on Zoom. Do we have a motion to adopt the agenda?
Motion to adopt the agenda.
Second. All those in favor? All right, that passes unanimously. We'll move on to announcements. Do we have any announcements, Nancy?
It's a Lake Whatcom outreach update. There's a new Lake Whatcom watershed baseline survey that you will get a notice about in your mailbox. All households will get that, and it'll appear within the next couple of weeks, according to the county. But remember, those are county weeks. Last survey was 2018. Not have any questions about banning motorized boats in the lake. Or may or may not in the survey, so you'll just need to take it to find out. It's be online. You'll get a URL to type. Your notice will be open for 1 month. One survey response per household. And if you want a paper copy, there'll be a number in the notice for you to call. That's it, folks.
Okay. Any other announcements? We also have the AGM this Saturday. In-person voting is in the morning before the AGM. 19. And you need to come before noon to register if you're going to vote in person. Don't come to just the AGM with your ballot to vote. You have to come and get a new ballot. So, and then I have one other announcement for the board. At the October 25th N&E committee meeting, the committee entered into a discussion concerning a letter it had received from Lori Robinson describing an interaction that Ms. Robinson had with Sonia Volt following the conclusion of the candidate forum on October 14th, 2023. The N&E committee ultimately voted to issue a letter of reprimand to Ms. Volt for her role in the interaction. As the president, I discussed these actions with SVCA's legal counsel, and it was decided to issue a letter to Gail Chiarello, the N&E chair. The purpose of the letter was to notify the chair that the N&E committee's actions in discussing and ultimately approving a vote to issue a letter of reprimand to an attendee for actions occurring after the conclusion of the candidate forum is outside the committee's authorities. The claims of harassment levied by Ms. Robinson were dismissed by the Whatcom County Superior Court, as Ms. Robinson was denied multiple times for an anti-harassment protection order for the interaction. The board be aware that that letter was sent. All right, we'll move on. Any other announcements? We'll move on to property owner comments. Speak at the podium.
Nancy Alionak for Sandalwood Circle. I'm here speaking as a member because I want to do something a board member cannot do from their seat, and that is talk about the 2 candidate forums. At the first forum, a candidate gave misleading information about transfer fee. He stated that we could reenact a transfer fee if it was done for a specific fund, and there is nothing illegal about that. And he made it sound easy. Firstly, the fee violates our bylaws. 2/3 of those voting would need to ratify a new fee, which is not likely to happen. Secondly, stating the transfer fee is not illegal is misleading. The transfer fee is not legal either. It is undetermined. We do not know what its status is, and neither does that candidate. At the second forum, we heard more misinformation. The second of two candidates accused our financial manager, certified public accountant, of using illegal mathematical operations in his budget preparation. The candidate herself has no license, CPA or otherwise, and may or may not have any accounting credentials. Then she told us, I would like to bring the full picture to you. She never explained in what way she is right and the CPA is wrong, nor did she explain or describe what her full picture entails. All we heard was slander and vague assurances. The purpose of a candidate forum is to allow candidates to present and defend their goals and objectives. That did not happen in our forums. Candidates were not asked to explain or defend their claims, no matter how vague or slanderous those claims were. This year's format did not allow that. Maybe next year we can hold a real candidate forum.
Any other property owner comments? All right. Seeing none, we'll move on to the audit presentation, and I guess I'll pass it to Joel here to start, and you can introduce the auditor.
Okay, so Ben has joined us online on Zoom. So Ben is a partner at Larson Gross, who conducted the year-end 2022 financial statement audit, and I guess I'll just turn it over to him.
Yeah, thanks, Joel. Thanks for having me tonight. I'm going to try to share my screen because I have some PowerPoint slides. I'll see if this works here.
Hold on one sec, Ben. We're just having trouble hearing you.
Oh, sorry.
That's better.
That's better. How's that? Okay. All right. Are you able to see that slide there?
No, you'll need to share. It's taking a minute. Now it's up.
Okay, great. Okay. Yeah, like Joel said, I'm here to present the 2022 annual financial statement audit requirement results. And so we did the audit this year, and it's a pretty intensive process going through an audit. And this was the team. That's me there in the middle. I work for Larson Gross. I'm a partner in the audit with test director here. And then the gentleman on my left, Mark Raker, he helped a lot. He was also in charge of the lease standard implementation. That was a new thing for me this year. And then Cole there on the right, he's our nonprofit practice leader. So he was involved kind of as a last review on the financials. So in terms of annual audits, they are required by Section 4 of your bylaws, and then any homeowners association with annual assessments of $50,000 or more in Washington also requires an audit. So clearly you met both those requirements to have an audit. Overall, though, an audit is good governance. good accountability to your constituents, which are your property owners in this case, and overall part of the good healthy system of checks and balances. Some common misperceptions about audits or they're a fraud investigation. We're not required to go search for fraud. I mean, sometimes, of course, we do come across suspicious things, but it's not part of our job description as an auditor to search for fraud. We're auditing the financial statements to make sure they're materially correct. And it's not a guarantee that numbers are right. So I use that word material. We set a threshold and can say confidently that the numbers are correct within a certain amount, which is materiality. It's not an insurance policy. It's not a review of every single check you wrote during the year, although we do look at quite a large number of checks to make sure they're properly supported. It's also not meant to be a once-a-year check-in on your staff. We do maintain contact throughout the year as needed to plan for any new accounting standards or kind of unique situations that might arrive so we can be prepared to your own. It's also not a substitute for good day-to-day internal controls. And when I use that term internal controls, I'm really just saying there should be multiple sets of eyes on every transaction. So you can't have one individual that would say have access to your bank account and be able to send wires or sign checks and have accounting records access at the same time. In other words, access to your system, to post journal entries, create financials and so forth. You want those duties segregated. The role of us, Larson Gross, as your external auditor, is really to be an independent, unbiased, non-political party that comes in and views your records and looks at your financial statements and says, yes, these are materially correct. We're licensed by the states. We're also regulated. We get audited as well to make sure we're doing safe audits. But we're responsible to you, the board, finance committee, management, any regulatory bodies. At the end of the day, when the audit's done, it really just tells you whether your accounting function is giving you good information. And it does definitely appear you are getting good, timely, quality information in your monthly board packets to make decisions off of. Also, an audit can tell you how to improve internal controls. I will say there does appear to be good segregation of duties and internal controls intact. So it appears that you do have the right people in the right places in terms of processes to maintain those segregation of duties and proper internal controls. Ultimately, though, provides you with assurance that these financial statements for 2022 are a reasonable depiction of your financial situation. I mentioned this year we did the audit, of course. We also assisted management with drafting the financial statements, which is really that final product that you get. Again, I mentioned also that new lease standard implementation was effective this year. We also prepare the Form 990, which is a nonprofit tax return. So no, you don't pay tax. It's more of an informational type return that goes to the IRS. That is a public document. So any nonprofit that files a 990, that can be pulled off different websites like GuideStar. We also assist on your IT side with what we call IT managed services. Just can assist as needed as boots in the ground. Make sure you have good firewalls, backups, antivirus packages, all that good stuff to protect your data. We issued audit statements. We will also issue a management letter that just has some required communications I'll go over shortly. So I'm going to walk through some highlights, but ultimately you will be receiving what's called a clean or unqualified opinion, which just says the financial statements present fairly in all material respects the financial business of Sun Valley as of December 31, 2022. And so when you look at your financials, the first statement you see there, it's called a balance sheet. So it has your assets there at the top, it has your liabilities in the middle, and it has your equity there at the bottom. So the assets are just all of the resources the association controls that enable you to provide services to the community. So the big ones there, of course, the cash that you have, some receivables that are owed to you, all of your parcels and lots held for sale have a value, so that goes on there. Property equipment, by far the biggest number there. That's all your roads, your buildings. There's some construction in progress at year end. So that's the biggest number clearly. A little bit of intangibles, but it's about a little over 22 million in total assets. And then right below assets is your liability section. So that's what you owe as of December 31, 2022. So they call them kind of virtually unavoidable obligations. So you would need to use your assets to pay the liabilities. And so if you exhaust all those liabilities, what you have left over is close to 13 million of members' equity. That's kind of your cushion and your safety net, you could call it. It's just assets less liabilities. And when I look at the balance sheet, I just do kind of a 2-column comparison. So on the left side, you have the 2022 numbers, and on the right side, your end of year 2021 numbers. And it's pretty consistent year over year. Cash is down a bit. You had some big expenses, property acquisition, some other construction. So cash is down a little bit, but still a good number, close to 6.4 million. Parcels and lots for sale are pretty in line with the prior year. I don't think any actually moved. That was more just a valuation adjustment to bump it up to about 228,000. And then property equipment is pretty steady as well year over year. So not a ton of action there in terms of year over year with the assets. And then down the liabilities, pretty similar as well. There's a huge number there you'll see for contract liabilities. It's about 6.2 million. That's really an accounting type entry that's needed to present these financials in accordance with GAAP, which is generally accepted accounting principles. And it's just for this revenue recognition adjustments that needed, because when you get capital dues revenue in, you can't actually recognize it in revenue until you actually expend the funds on capital improvements and other projects. And so that 6.2 million at year end is really sitting there because it came in now and eventually will be spent, but it can't be recognized as revenue until you actually spend it. I know it's complicated. And then construction loan, that was modified in 2022. So that's about 1.9 million balance at year end. And then you'll see right below that finance lease liabilities. That was part of that lease standard I mentioned that was new this year. In the past, those were called capital leases, things like printers and different equipment that you purchase on lease. So it used to be called a capital lease, now it's called a finance lease. And then at the bottom there, that's your equity in your cushion. So that is the balance sheet. With that said, I'll go over to the income statement, which is the other major kind of financial statement. Just revenues at the top, expenses at the bottom for the year. We ended up with a little over $1 million in excess of revenues over expenses. It's always nice to be positive as a nonprofit. And then if you do the 2-column flyby again, I kind of look year over year. Dues and assessments for general and recreation were pretty similar year over year. And then you see a big jump this year in dues and assessments for capital expenses and reserve funding. Again, that's that accounting standard we need to utilize, which recognizes revenue when you actually spend the funds that you charge for dues and assessments for capital. Golf was up a bit, so another good year for golf, it looks like. And then the rest is pretty consistent. Other than at the bottom of the revenue column, you see that PPP loan that was forgiven in 2021. That didn't recur, of course, in 2022, but year over year, up pretty significantly in revenue. And then down below expenses, they were pretty consistent year over year. Obviously, cost of living adjustments, making it salaries and wages go up. But everything else pretty consistent.
Actually, hey, Ben.
Yeah.
I'll just jump in just to kind of reiterate. So this is the third year that these statements have to comply with what's called County Standards Codification 606. And that's what Ben was referring to on the balance sheet, that large number, the contract liabilities. And then basically on the income statement, the biggest number that you're going to see where it really affects it is the third one, the dues and assessments, capital expenditures, and reserve funding. Now, this is, of course, I've explained this last year and the year before, but I'll just explain it again this year, since this is confusing, and this is because of that standard. So basically, just to put this in a really fast nutshell, how this used to work. So this applied to all our financial statements year end 2020 and beyond. Obviously, we're in 2022 now, but prior to that, this doesn't apply to operations, but it applies to the capital, basically the dues funding. So like, let's just say in year one, we have $2 million of capital dues revenue that it was approved by the budget. We build the membership. So our capital dues revenue, $2 million. How it would normally go, it would then show up on this income statement pre-ASCII 606 as $2 million revenue. And then we'd have $2 million obviously in cash. Let's assume we didn't spend that whatsoever in that year. Now, with ASCII 606, basically that is saying you can't recognize that 2 million until you spend that money on stuff. So then in this case, we'd obviously have the cash of 2 million. We'll assume we had no bad debts. And then we'd have a contract liability balance on the balance sheet of 2 million. So that's how that plays into it. Then at the end of the next year, let's say we had another 2 million in capital dues charges that we charge people, and we collected all of it. So now we collected 4 million in the last 2 years. Then let's assume the board approved $4 million of spending on roads and bridges and stuff like that. And we spent the money in the second year. Well, then strangely enough, on the income statement, we would show $4 million of revenue that now we can claim. And then that contract liability balance on the balance sheet would obviously zero out and go away. But it's basically the bottom line is this is a complicated adjustment. I do this adjustment every year for the audit. But for our monthly financial statements, kind of giving us the best of both worlds, I've elected to keep that as it normally was. So it's the dues, when you see the monthly financial statements, capital dues are as billed as we bill the membership. And that makes it very comparable year over year if you're comparing July to a July the prior year, the year before that, and whatever. Otherwise, it get really confusing on the monthly financial statements. So then for the year-end audit, then I do this annual adjustment to true it up, to pull it in line with ASCII 606. So that's basically why you're seeing like a difference on these statements versus like our year-end monthly statements.
Yeah, that's really well said. It is complicated, and we have to do this for the audit of financial statements to provide a clean opinion, that unmodified clean opinion I talked about at the beginning. Because if we didn't do this, the statements wouldn't be in accordance with generally accepted accounting principles. But I do think it is a good approach, how you're doing it, where you're not making these adjustments on a monthly basis. It would get very cumbersome and not be totally clear for comparability purposes as you go through the year. So because we're doing the best we can. So those are the financials. Those are the highlights. We also issue a management letter, and it's just some required communications, describes our responsibilities. There was no unusual transactions this year. Depreciation is probably the biggest estimate we do as part of the audit, which is just kind of writing down fixed assets over time as they're used. They lose some value, so you have to write them down for accounting purposes. And then any adjustments noted, and then there's no material weaknesses that you can look at efficiencies in internal control. So overall, really good audit, very good results, very clean audit. So I was super happy with how it went. Hopefully Joel and the team was as well. The reserve study is always something that we kind of wait on because we need the reserve study to finish the audit. You'll see in the financial statements the very end of it, the last few pages has the reserve study. Because it's a required statement as part of audited financial statements for homeowners associations. But kind of once we get that, that's when we're off and running with the audit each year, and that was finalized in September. So with that, I guess, any questions?
Any questions for Ben?
Can you hear me, AJ?
Yep.
I have a couple of questions. I just would like a clarification on the one thing where you talked about our dues and assessments, and either you or Joel can answer it. You said it only has to do with our capital accounts. Does that mean all the amount of dues we collect for surf, roads, and the mailboxes are included in that too,
That's
as far as assessments go?
And also the that capital transfer fee that gets swept into that too, meaning in past statements, those would be backed off as well.
Okay, I was just curious about that. And the other question is in the report on page 11, and I'm assuming there's a couple of yellow areas. I'm assuming the one on page 10 is just to reflect the date today, I'm assuming.
Correct. So
I'm not sure or when that's supposed to be.
presumably, the board would approve the financials today, and then we can issue the final statements. Board
Okay,
approval is the last step. Yeah.
And then on the bottom of page 11,
Mhm.
it says, there's a couple of blanks there, and I don't know where we get that a couple of highlighted, where we get those finally.
Okay, so this pertains, Linda, to the construction in progress amount. And it's just, Ben, of course, would like this sentence in here since the construction progress amount it's 1.6 million at the end of 2022. And since it's more of a material number, just more of an explanation of what that is.
Okay, I was just curious because that was sitting in there, that's all.
Yeah, good question.
Any other questions? So we should be making a motion then to approve the issuance of the final audited statements.
We did that last year.
We don't have to make a motion.
Yeah.
Yeah, I think, yeah, that sounds. Okay. So I don't think we need to do anything really. I think, yeah, the audited statements are audited statements.
You'll make sure that those get posted up and the final version
Yeah.
will get posted up and you'll send it out to all of the board.
Yeah, when we get the final audit, then we'll send that out and post it on the
When do you
website.
expect that?
I think that'd be, hey, Ben, when do you think time-wise you would be looking at for finalizing the audit?
I would think either tomorrow or Monday.
Okay.
Awesome.
Thanks.
Thank you.
And just a heads up that Form 990 nonprofit tax return, that is due November 15th, and it's basically done. And so eventually that will be getting filed here in the next week or so too.
That has to be signed by the president, doesn't it?
Correct. Yep. So that's still AJ, right?
Yeah.
Okay. Yeah, AJ knows the drill, I think.
It's not ready yet, but
It'll be ready soon.
Mine are pink.
no,
You say DocuSign or
we've always had you find a hard.
never mind.
All right.
Any other questions? All right. Thank you, Joel, and thank you, Ben. Yeah, all the work that goes into that.
Yeah, thanks, Ben.
Yeah, thanks all. Have a great night.
Thanks, you too.
All right, we'll move on then to the next item on the agenda, which is new business. And the first and the only item under that is a capital request for the Barn 8 gas furnace replacement.
Thank you, AJ. The purpose of this request is to receive approval for the contract award for replacement of 4 gas heating units located upstairs in Barn 8, also known as the Dance Barn. And those are the 4 loud heating units mounted on the ceiling in the 4 corners of the room. On October 11th of this year, Barron Heating inspected 4 gas heating units in the Dance Barn as part of their routine service contract. During inspection, they noted that all 4 heating units are at the end of their serviceable lifespan and recommended replacement as soon as possible to ensure reliable service. The 4 gas heaters identified are included in the approved Barn 8 renovation project that is scheduled for this spring. As part of the analysis for the renovation project, specifications were provided for replacing these heating units. With winter approaching and the heaters at the end of their lifespan, it is prudent to replace the heaters prior to the start of the rest of the project. Quotes were solicited from 4 vendors using the specifications outlined. The 4 vendors contacted were Barron Heating, Mars Heating, Linden Sheet Metal, and Angar Mechanical. 2 of the vendors, Barron Heating and Mars Heating, had the capacity to quote the project within the time frame given. Both vendors quoted installation of the same units and had similar workmanship warranties. Mars Heating quote of $15,747 is the most competitive, making it the preferred option. So I propose that the board approve contract award to Mars Heating to replace 4 gas heating units in the Dance Barn as part of capital project 9722.09 in the amount of $15,747.
Is there any discussion? Nancy?
AJ, I have a couple questions, please. I'm sorry, I can't find my my raised hand. Do we know when these are going to be installed? I didn't see a date of when they can install.
I have no idea, Linda, but we would need to approve it first.
Oh, I know. It's just usually they have a, if you, because it sounds like this is time sensitive. So I would just kind of expect to see a time for them. Something I noticed that I would like us all to look at, doesn't have to do with them. I saw the heaters in the 2022 reserve and in the 2023 reserve, but in the 2024 reserve, I didn't see the heaters in the Dance Barn anymore. It's like that item's gone. And if we could look into it, that would be really nice of why it disappeared all of a sudden.
Became part of the project. What's it? It's got a different name in there.
Barn 8 renovation.
What is it?
Well, the capital project is the Barn 8 renovation.
So it became part of the Barn 8 renovation, but so it's part of that overall project. And
Oh, I understand, Sonia. What I'm saying is when we replace these, we're going to want to have a number, which is going to be this $15,000. And I'm saying it was there before, and I thought maybe it got rolled into the HVAC. Well, once again, all of a sudden it disappears and you've lost a component. And yet, quite frankly, they'll probably be replaced again before the Barn 8, the total Barn 8 renovation is dealt with.
but it's actually in there. I just can't remember what it's called, something else, because of it's connecting into a different system is all I'm saying. So it's broken out separately, but connecting with that
I'll take a look. I'm just saying it's strange that it was there for 2 years and all of a sudden it disappeared. And it's possible they've lumped it in with HVAC, because the only other thing that comes close is the furnace, but that furnace is something completely different, although it's part of heating. And that, maybe that's what they did, but I'm just saying I almost would like to see it go back there, but that's something for talking to the reserve specialist about and making a decision of if, $16,000 worth of heaters should be left to have a separate line item like it used to have. That's all.
Nancy?
Yeah, will the new heaters be any quieter than these old heaters?
No.
Oh,
Really? Really? They won't
Yeah,
be
I mean, the fan has got to run to move the heat off of the
Mhm.
the elements that heat up. It's just the way it works. I mean, it's a newer model, so it may be a little less noisy, but no fan, no noise, no fan, no heat.
Although can I interrupt for a minute? It does say, Nancy, in the description here from Mars, low noise operation with vibration isolated fan venter motors. So maybe it will be quieter.
My modus operandi is always to keep expectations low so that we can exceed them.
Okay.
Nancy?
nope.
There are questions, discussion? Right, I'll make a motion that the Sun Valley Board of Directors approve the allocation of $15,747 from SURF to Capital Code 9722.09 and authorize the general manager to execute the standard SVCA construction contract with Mars Heating to replace 4 gas heating units in the dance bar.
Second.
Any final comments or discussion? All right, we'll call the question. All those in favor? All right.
Aye.
It's unanimous. Adjourned. Thank you, everyone.
Thank you. Goodbye to all of our departing board directors, Asia, Nancy,